Welcome, Neha. Your topic is estimation of working capital requirement. For the two different approaches are there. One is called the total approach and the cash cost approach. You can start.
Good morning to everybody. My name is Neha. Now, today we are going to talk about total approach and cash cost approach of computing working capital requirement. I'm going to introduce this topic through a story. Basically, how it is going to do is let's say the story. I'll tell you the story now. One father has two sons, and one son his name is called Aditya. He has a business. He's taking care of a unit in his father's business. And there is another son called Adi. And what he does, he takes care of another unit. And through this course, they were running this business for 3 years. And both of them are twins. So at the same time, they took over the business and they're running it. And what happened is that in the profitability in the son two's business went down. So when the father looked at the cash statements and the profitability statements, he started to notice a very weird phenomenon, that is inflating of various costs that is not actually explicit cost, that is implicit costs like rents, depreciation, and other stuff like that. So in order to properly rectify that, the father went to a chartered accountant and he asked, what can we do? And he told, one of the major parts that affects profitability will be working capital requirements. So what we can do is we can appoint a new method that is called cash cost approach, that will help you to identify what is explicit cost and what is implicit cost. And that is how the father identified the mistake points and he rectified that, and the business and the business accountability increased. So does this total approach and cash cost approach work? First of all, there is rules for valuation. So first we'll check as to how total approach works and how betterly the cash cost approach implemented help the business to improve. Total approach, in the first element, in as every one of us know, in the working capital requirement, the first element will be raw material. Raw material is purchase price. Both in total approach and cash cost approach, you cannot change that because there is no element of profit or depreciation included in it. Next, we have work in progress. Work in progress is the next stage of raw material, that we take direct labor, direct expenses, and production overheads. When you take production overheads, you include depreciation and a very small profit element included in it. So what the chart accountant told was, let's subtract the implicit cost, that is the depreciation and the profit, from the work in progress. Next they identified finished goods. Finished goods in total approach, you do cost of production, and even for cash cost approach, it is cost of production, but you subtract the depreciation element from it. The next one is sales. When you do sales, you get debtors. So how do you value the debtors? The debtors can be valued either at selling price. Selling price, you value it in total approach, and then you have cash cost approach, that you subtract the depreciation and the profit element included in it. And finally, you have creditors. Creditors is what you get from your raw materials. You cannot subtract profit from it because there is no profit element included in it, nor depreciation. So this is what basically rates of valuation were used to improve the profitability situation of the business. Finally, when we talk about doing sums in this approaches, uh, unless they have specified depreciation or profitability element in your question, don't do cash cost approach. Yeah. Thank you, sir. Thank you for the opportunity.
Yes. So the difference between total approach and the cash cost approach is non-cash element. To do the business, to start the business, what is the real cash you need? That alone, if I'm going to identify, that is called the cash cost approach. Whereas balance sheet approach, current asset minus entire current liability, including depreciation, including profit, including non-cash items, then it is called total approach. For that, validation rule is important to solve the problem. That is what our Neha has explained. Very good, Kanna.
Thank you, sir.